Dear ladies and gentlemen, my name is Igor Vasiliev from Global Investment Academy, and today we're going to cover the very interesting topic why it might be better to keep your money in interactive broker and not in your bank. Okay, what we're going to cover during this video. First of all, we're going to look when you might want to consider this option, because this option is not for everyone. For some people, it is definitely better to keep money in the bank, in your local bank. But for some people, it might be a very, very good option to keep money in interactive broker rather than in your local bank. And we're going to look at it. Secondly, we're going to look at pros and cons of keeping money in your local bank, because some people believe that it is the best option, but in reality we're going to look at this. Okay, and then we're going to look at pros and cons of keeping money in interactive broker, and then we'll compare. And when you look at your life options, what you're doing in your life, you might think, okay, I'm going to transfer some money in interactive broker and keep it there because it's more convenient for me. Or you might consider, no, I'm still going to keep all my money in your local bank. And then, of course, when we discuss all these options, all these pluses and minuses, all these advantages and disadvantages, I'm just going to show you, is it difficult to open account with interactive broker or not? Okay, first of all, let's have a look when you might want to consider this option. Uh, Probably the most important part here that you have a disposable income which is much higher than your own or your family spendings. So every month you have some money left in your account and it's building up. Okay, you have more and more and more cash. And of course you might consider to invest in some areas, but for example, right now during this crisis, it's quite difficult to decide where to allocate your cash, because you don't know how long is coronavirus going to last, how long the quarantine is going to last, and how strongly it's going to affect different businesses. So you think, all right, I might keep the money in a bank, but the banks are not safest place to keep the money in. And if you didn't watch my previous video why I don't keep money in a bank, and please have a look at that video. Definitely you will learn some very interesting things about it, because during the crisis banks, they suffer the most, and we're going to look at these options a bit later. So another option why you might want to consider this opportunity to put money in an interactive broker is that you don't trust your local banks with your money. Of course, in some kind of trustable countries like United States, Australia, some European countries, the banks are very, very strong and they have a support from government. The government won't allow them kind of to fail, right? But when you go back in 2008, before that, we saw some banks and we thought those banks will survive everything. And a year later, those banks disappear from the world, like nobody see them anymore, and people lost a lot of money. Now, where is the guarantee that it won't happen again? So when you understand properly how banks operate, you kind of straight away see where the flaw is and how they can repeat the same situation which happened in 2009. So also, if you live in a country where banks are not that regulated, in like in as I said, like in some countries in Europe or United States and Australia or some Asian countries, but and you understand that because of lack of regulations, those banks might be a bit dodgy, okay, and during this crisis time they might be closed instantly, or the government, local government, can take their license away. And if you live in that country for whatever reason, maybe you're traveling or maybe you're a resident of this country, you don't trust your own bank, so you might start thinking kind of, where will I put my money? But if there are a lot of banks like that, so it's quite difficult choice to do that. Okay, that's the second option you might consider why to move your money into interactive broker. So third option, third reason is when you travel a lot and you convert the currency from one to another quite often, right? And maybe you travel to Europe, you transfer United States dollars to euro, or you might travel from Australia to Europe or from Europe to the United States. Doesn't really matter where you travel, but you constantly convert your money from one currency to another. And a lot of people don't calculate how much charges they have during these transactions, because very often they don't like transact straight away a lot of money. They don't exchange like $10,000 or $20,000. Usually they exchange like maybe $1,000 to have something in cash, and then they're using credit cards, and they never pay attention how much they actually pay when they convert one currency to another currency. And I'm going to show you just a couple examples during this video how you might be affected by that. Okay, and the fourth reason, you might want in some circumstances to keep your money out of control from government and legal authorities or that particular place where your bank is located. I'm not going to go into details, but I already know that some people, for example, from Russia, right, when they open the bank account in Russia, it can be easily seen by all legal entities in Russia. So, for example, if there is a divorce and one person has a lot of cash and doesn't want, for whatever reason, to share with another couple, if they transfer the money to Interactive Broker, it's actually not accessible anymore, and government won't see that type of cash. Of course, it's immoral, illegal, but some people are looking for this option. But in other cases, the government itself in certain countries is not that stable, and people afraid that the government might come and take the cash from them for whatever reason. They will find the reason why to do that, or some authorities they might do it. So in these particular cases, people looking for safer place to allocate their cash, and to open bank account in another country, it's not as easy anymore. It's one reason. But secondly, when you open the bank account in another country, there is an agreement now, and that every country has to provide information to the another country where you're a citizen or resident about your bank accounts and all your transactions. So you still will be liable to all kind of fees and etc., etc. So there is a connection now, certain agreements. So your government or kind of legal entities will see that you have certain cash in that bank. But brokers, they don't have to report, at least for now, during the recording of this video. They don't have to report how much money you have, what transaction you make, and it's totally up to you if you want to do that or not. Of course, I don't recommend it you in no way that to hide this money, and especially don't try to avoid paying taxes. But in some circumstances, as I said, it is safe to keep money, at least some of your money, in Interactive Brokers, because it's not transparent to your local authorities. Okay, these are reasons where you might consider to keep money in Interactive Broker, and then we're going to now look in details. Okay, when I told you that there is a risk to keep money with your local bank, we're going to look at those risks. Okay, let's start from that. Pros and cons of keeping money in a bank. So first of all, advantages. Definitely, it's quick access to cash. If you need cash, you go to the bank, you get it. If you want to transfer money to some third party, you can do it. You can transfer money to your friends, you can transfer to some businesses to buy something online. It's very convenient. Of course, you have a card, credit card or debit card. It's also allow you to use your cash quite easily. Now, if you go back even few years back in Europe, there was a crisis in Greece. What happened there? European Union kind of disconnect Greece from all other banking services, and banks in Greece were kind of on the edge of bankruptcy. All the banks, completely all banks in Greece. It doesn't really matter what kind of bank was there, even if it is most reliable state bank, you had a problem with accessing your cash. You couldn't just go and get it. People had to queue in order to get the cash, and they were getting only 70 euros per family. a day. So it's just sometimes it's unbelievably low because you have to pay your rent, mortgages, expenses, etc., 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 all the fees, and then you get in only 70 euros in cash. And majority of places they won't accept cards anymore, so you cannot go and buy coffee using card. You have to get cash. So and at that time it was quite a huge problem to do that. Now, will it happen again? We don't know. It might happen because it happened historically in different countries, and when it happens really, really quickly. Can you imagine if you have huge amount of cash and you require that cash and you don't have access to that? So it could be a big problem, right? So in any way, so that's the advantage, that in the normal circumstances you have access to this cash. Then you are protected by local government, local legislation. And if there are some issues with the bank, you can sue the bank and get the money, because like it's easier to do that rather than when the bank is located overseas. It's quite complicated. So if you live, for example, in some European country and you have bank in Asia, and then something happens with this bank, so it's quite difficult to even proceed with legislation issues, because you have to be present or you have to find a local lawyer or something else. So definitely it is an advantage that you're protected by local legislation. Now, and probably also this the fourth advantage is that you getting high interest income on your saving accounts. And some banks, they provide higher interest than other banks, and that's how they attract a lot of clients. And people bring money there, but also when they give the loans, they usually charge higher rates for those loans as well. And it's interesting when you try to understand, when you look at profitability of the banks, you see that some banks, they are more profitable than other banks, even though they have exactly the same amount of cash, same amount of assets. And you always consider why it happens. Is that bank more efficient? But when you look at the rate which they provide their loans, different creditors, right? So you will see that they charge high interest. You have to always ask, why do they do that? Okay, and we're going to look at this on the next slide. So what kind of disadvantages of keeping money in your local bank? As I said, it might be badly affected by any economical crisis. So the same happens in 2008. Exactly the same situation happened in a lot of countries in 1990s, in Russia, in like ex-Soviet Union countries. It was an awful situation. People lost a lot of money in different banks. Even in some countries right now, government constantly take like licenses from different banks for different like reasons, right? And people who have money there, they might lose them if the banks is not like an option to pay. So it's quite a different time, and we're going to look at this again. Now then, disadvantage is again it's transparency of your savings for local government and legal authorities. For some people, they don't care about that, and actually they even prefer that they're transparent, because when you go and get a loan, it's quite good. You can get loan quite quickly, right? You can get buy a car or buy a mortgage, and like get a mortgage and buy a house or something like that. So in a lot of cases it's an advantage, but for some people, for whatever reasons, we're not going to discover them, it might be not always good, right? Then the interesting thing that personally I believed before I was researching information for this particular video, I believe that level of insurance in like in Australia, at least in United Kingdom, is quite high. But when you look at it, it was surprisingly low. In Australia, it's $250,000. And if you convert it to US, it would be $155,000. So it means that if you have $1 million on your bank account and bank got bust, you might, and it doesn't have money, so you actually covered only for 155,000 of US dollars, or 250 Australian dollars. In UK, when it's even lower, it's 85,000 British pounds, which is 105 US dollars. And when you go to Russia, in Russia it looks like 1,400,000 rubles, but when you convert to US dollars, it's only 18,000 rubles. Now you understand that if some business person keeps money just purely in Russia and that particular bank is failed, it means that that person practically doesn't get any cash. Like person has $1 million and it after the bankruptcy of the bank, that person will get only $18,000. Can you imagine the whole wealth which might be built for years and years can be wiped out within a second if the bank is failed. So be careful about that. Research your own local bank, what the insurance level they have for your savings, because I presume you never even considered that. You never even looked at this because you thought, oh, my bank is secure. Okay, please research it. Then another thing. So when we go to travel situation, if you travel a lot to different countries and you use different currencies, so or you want to keep money in different currencies because like in some countries there is a higher rate of inflation and currency devaluates, so you want to keep money in, for example, in United States dollars, but you cannot do that. Not every bank allows that. Or you might want to have diversified portfolio of your currencies to protect yourself, protect your savings, and you want to keep euros, you want to keep Australian dollars, you want to keep American dollars, you want to keep some kind of Asian currency, but then you discover you can't do that. Banks won't allow you to do that, and even if they allow you to do that, not every bank allow you to actually convert, like transfer the money to another country from your currency. Sometimes I faced a situation with local banks in Australia when I wanted to convert, for example, send money to Russia, and when I come with US dollars to the bank, they won't take US dollars. They say, oh, we convert them to Australian dollars. And interestingly enough, when they send in to Russia, they again convert it to US dollars and then only convert to Russian dollars. So it's 3 times the transaction I have to pay for. Of course, I'm losing, like at that time, I lost quite a lot of money because I had to send money quite urgently. Then I researched the area and now I know how to do that. Okay, and then it is quite costly to convert one currency to another if you do it in a bank, especially if you go to the retail or online banking. It's quite costly and they have hidden fees. So you'll see first the rate of exchange, but when you pay, you actually pay an additional fee for conversion as well. And another thing is only few currencies available for that. So you might have only 2 or 3 currencies in a bank which you can convert money to, and not the rest of it. And then you have to go to all these kiosks and convert the currency there. Okay, these are pros and cons of keeping money in a bank. So if you didn't know something or you don't know something about that, please research your own bank and see what's the level, especially level of insurance you have when you keep money in the bank. Actually, the interesting thing about the I know definitely it's about Russia. I'm not sure about UK and Australia, but this 1.4 million rubles is for all the banks. So it means that if you keep let's say 1.4 million in one bank and 1.4 million in another bank in Russia, and both of them failed, you're going to get only 1.4 million. So it's like per person, it's not per bank. Okay, so this is kind of very tricky situation, and that's why a lot of people in Russia, they are not confident about their savings because their protection is so low. That's why they want to move their money outside of Russia. Okay, but the similar situation happens in different countries. The reason why I know so much about Russia, because you probably understand from my accent that I have a Russian background. Now, I want to show you how banks make their money. I already had this another video where I explained it in details, but in this video I just want to repeat maybe once again. So the way it works, so depositors, people like clients of the bank, they put their money like to current account to use the cash. Majority of people don't save the money now in their home. They don't put them in the safe, they put them in the bank. And anyway, it's like it's current economy. So and sometimes banks pay nothing. If it is a current account, practically nothing, I'll tell you, because it's 0 something 1% or whatever, right? So they kind of have free cash, okay, but they don't have a security on how long you're going to keep this cash, because you can come and withdraw this cash at any time. You don't have any deposit terms. Some clients, when they have cash, they put on deposit, and it's quite low In some cases, it's only 1, 2, maybe 3%. In some different currencies, it might be higher. For example, in Russia, I know that they're getting up to 8% in certain banks, but in rubles. Okay, but you don't know how devaluate the ruble is going to devaluate for next year. So it might devaluate much more than 8%. So you're going to lose even if you get in 8%. So you always have to consider that. All right. So in any way, bank gets your money and then it gives money away. Like, I mean, not away, but lends money to different businesses or private people to buy something, to buy sofa, to buy car, to buy house, right? And then to businesses to start their business. Now, interesting enough here that you will probably, if you go now and look research in your area, you will see that some banks, they will probably give the loan and they charge you 6%. In other banks, 8%. In other banks, 12%. You will ask, what the heck? Why people will go to and get money and pay 12% when they can go to another bank and get money only paying 6%? But in reality, they can't, because those banks would charge like 6%. Most likely, they have much stricter rules for you to get money. So if you're borrowing money for the business, you have to have, for example, 50% of your own money invested in that business, or you have to have certain assets. For example, you have to have your own premises already bought or certain equipment. And the bank, in this case, they kind of trying to protect themselves. So if you fail to pay them this money, they can sell your equipment, they liquidate you through the bankruptcy, and then to sell it and recover at least some of their loan which they provided for you. But some banks, they're not as strict, especially small banks. What they do, they attract people who don't have that securities and they give them money, but in order to cover their risk, because it's much riskier to give a loan to somebody who doesn't have any securities against that loan. So of course they charge high interest. And when the economy is good and everything is rosy and it's easy to make money, those businesses tend to survive and they tend to pay the banks their money. But when something like now happened with coronaviruses, when a lot of businesses just shut down and there are no clients, they still have expenses, they still have to pay some employees, they still have to pay their rent, they still have to pay a lot of expenses, right? But the problem is there are no customers, no clients, there is no cash flow. Those businesses are going to fail. Yes, there is of course support from different governments, but not every government supports it. And if you live somewhere in Asian countries, in Thailand, there is no support like that. At least there is a very small one. Okay, so the question for you, if situation like that happens and you keep the money in that particular bank, so it means that you gave money to the bank gave money to this particular business, and when you saw the previous results, you were happy about it. Look at this. This bank makes more money because they're charging high interest. But when the crisis happens, because majority of their borrowers, they're dodgy businesses, they're not going to return the money to the bank. And of course, bank doesn't have cash to pay you back. Now, what happens with the bank? Bank goes into bankruptcy or liquidation or something like that. And in this particular case, the people who put money in that bank, they lose money as well. So the situation might be repeated. Similar thing happened in 2008, 2009, when but there was not a business loan. It mostly was dodgy mortgages when they were given nearly to the dog, right? And of course dogs won't pay you money back, and like banks failed because of that. Same as private sector now is suffering as well. People who took their mortgages, if they lost their jobs, they cannot pay their mortgage. If they borrowed for the car, they cannot pay the car. And even if the bank repossessed the house or repossessed the car, where are they going to sell it? Right? Because nobody is going to buy it when the crisis, when the people cannot get cash from their jobs. Why would they buy another car? Why would they buy another car? The prices for properties might go down. They didn't go yet, but if this crisis is going to be extended for another couple months or quarters, it will be a disaster. It will be a huge disaster, and a lot of people are going to lose their properties, and banks will repossess it. Similar situation happened in Spain. after 2009, they repossessed a lot of properties, but the problem was for nearly 7 years they couldn't even sell it, right? They were still on a balance of this. They didn't want to sell it that low because it even wouldn't recover their loss, so they had to keep their property on their accounts, maintain them, find a tenant, and etc., and wouldn't sell them for quite many years, right? So as I said, the two incomes in banks: interest income, mortgages, business loans, personal loans, and non-interest income. Usually it's loan processing fees, like conversion fees, like exchange conversion, foreclosure charges, etc., etc., etc. So please have a look at another video. The link is going to be provided under this video in description, so if you want to see that.